Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon once again. Welcome into Market Talk for this Tuesday, May 18th. I am your host, Jesse Allen. Great to have you here with us. As always, markettalkag.com, our home on the web. Markettalkag.com is our home on the World Wide Web. We are in our Florida studio today as we are on the road for some events here this week, but great to have you here with us as we talk the markets and plenty to talk about. Let's bring in our good friend Bill Biedermann with agmarket.net joining us here today. And Bill, good to talk with you once again. And you know, really this market, we saw the big sell-off to end last week, and yesterday was a bit choppy trade, it seemed, but we're coming back in and seemingly buying some breaks here today. Let's start with corn. The Chinese continue that appetite. It's strong for new crop corn, and that seems to be propping up the corn market today.
Yeah, Jesse, they have bought up to 8 million tons of new crop for the year so far. That compares with like only 800,000 tons a year ago. So 10 times the amount. So a lot of people are arguing that, you know, China's not going to buy as much next year. I mean, the USDA argued that by lowering their export number by an unbelievable number, which caused the carryover to be bigger than what we think it will be. And while I'm on that subject, they did the same thing last year. I think there were 7 or 8 revisions of about 700 million bushels. So, you know, I mean, we're just dealing with such bad information coming out all over the place. It's been driving the market down. And then, of course, there was the private forecast for a gazillion more acres, and that's really scaring a lot of traders who were committed to buying the market. So we need to set back and take some of that price risk out of the market, get it down to where we're so cheap that they just can't stand to do anything but buy. And that's what we're trying to do now.
Well, and you mentioned that private forecast for more acres, and I would agree. It seemed like that was a big influence that scared a lot of folks here, and we have to take it with a grain of salt. Obviously, we'll get the USDA numbers June 30th, but you know, it seems like, you know, the job of the market in this corn market the last month or so has been trying to buy more acres, and supposedly with that private forecast, that's the case. But again, so much information out there, and a lot of it is hard to decipher, and it can swing this market volatilely one way or the other.
Yeah, I mean, like, we believe that we did buy acres. I mean, that was the function of the market. But, you know, the question is how many acres are actually out there that are possible to be planted? And our analysis was 3 million, you know, probably 2 to corn, 1 to beans. To go beyond that, you either have to take everything out of PP or make up some acres. Now, I will go back and say, historically speaking, I've been doing this for 40 years, and for about 20 or 30 of those years, USDA has often either added 4 million acres or subtracted 4 million acres. We refer to them in the industry as ghost acres. So, you know, if you take the 3 plus 4, that's 7. So is it possible? Yes, it is possible. Is it numerically possible? No, it's not. I want to talk about that export number too. Last year, the very first estimate for exports came out at 2.150, 2150 for corn exports. After 7 revisions, they put the number at 2.775. That's, you know, 625 million bushels more. You do the math. That's a big error. Okay. Well, I'll point out that their export estimate for next year, which gave us the 1.5 carryover, is only 2.45. I mean, it's 325 million bushel less than what we're doing this year. Is that possible? Of course, anything is possible. But that's a really big drop in a world environment where stocks are tighter. We are the only store that has stocks on the shelf to sell. And the current pace of China buying is 10 times what it was a year ago. So You tell me. I mean, are they undermining the demand numbers to keep the carryover where they're at? Are they going to raise acreage on the next June 30th report? These are huge questions that could actually define whether the top is already made or whether we have to go higher because now all of a sudden maybe we won't hit a record yield.
Well, and you mentioned that world supply in Brazil is another issue. That safrinha corn crop the yield continues to drop by the day. And, some people are wondering, USDA maybe finally starting to acknowledge that a little bit on the May WASDE report. But even so, a lot of folks in the southern hemisphere down in Brazil, that crop is like I said, dropping like a rock by the day, Bill.
Yeah, most people in the industry are at 97. The USDA went from 109 down to 102. There's still 5 million tons. I mean, that's what is that? Like 200 million bushel over what the trade is thinking. And 97 is kind of like the top end right now. Most people think that if we continue dry for another 2 to 3 weeks, like we just finished the bulk of the pollinating down there, so now we got to go into finish pollinating and fill. If we go dry another 2 to 3 weeks, that's going to be significant. That will take you down to 95. That changes all the world numbers of who's got grain, who can logistically get grain. A lot of things change when you swing that pendulum down like that. So, time will tell, but it appears that USDA is just repeating foreign government numbers. Like, CONAB came down to 102. So that's where they put it. And, the same with the China thing. China doesn't have big imports forecasted, so USDA doesn't. In reality, they're buying. So I think we should be reflecting that so we know what our potential stocks really are.
If I'm a producer, one more note on this corn market before we shift gears a little bit. Obviously we've taken a good chunk off this corn market the last few days after that WASDE report. Some producers that the emotion might be getting to them. They're looking and going, "Oh, I should have sold at, $7 quart or $6 new crop or whatever the case is." But when I'm looking at this, still a lot of profitability out there. What would you say to producers who maybe didn't pull that trigger before the WASDE report on some sales?
It's funny you say that because we dedicated our video that we put out every week. Yesterday's video was really focused on that. We pulled up the P&Ls of some farms that we work with and showed the customers there that, look, if you miss selling it at, $6, it doesn't matter. Your profitability is still this, which is huge. I mean, it's still gigantic. And, even if you take money out of that to account for some options that you would buy to manage the upside in case it does come along, you're still doing great. I mean, the one farm we were looking at, the guy's salary, we were able to bump it from, a typical $20, $25 per acre all the way up to like $150 an acre. And the farm is still profitable. So, you really need to look at your profitability. You need to know your cost. You need to know what your potential revenue is. And I'll tell you what, you're going to be under a lot less stress. There's a lot less stress to manage a company profitability and manage the outside risks of the market going up, like with options, than it is to try to manage by guessing the market right. Because I can tell you, guessing the market right doesn't happen. I mean, you're good if you do 30%.
And that would apply to everything as well. Good thing to keep in mind there. On the soybean market here today, bean oil kind of faltering a little bit, and that kind of pulled this bean market back a little bit from some early highs. But overall, the soy side of things still looking fairly strong. Any thoughts on that soybean market today?
Well, we need to get over July 1603. We popped over it just enough to hit stops. I don't know how they know how to do that all the time, but they did. 1603 is a key number. If you can close above that on the July contract, we're going to test contract highs real quick. We failed today at 1604 3/4. Just went through 03, hit the stops and failed. We're down 14 cents at 1573 right now. That's a pretty significant sell-off. If we close below 1573, that might set us up for another leg down, like an ABC correction, and get us down to about a 50% pullback of the run-up that we had since mid-April, which would bring it back down to like 1527, 15.25, call it that. But that's 50 cents lower than where we're at. So on the chart, it doesn't look like much, but boy, I'll tell you, if you're putting up margin money, that would be a ton. So it's really smart to be very careful in this volatile market.
We know weather obviously playing a key role in everything, and definitely played a role in the wheat market on Monday. Shot that market lower with rain in the forecast for the northern plains, and then today we take some rain out of the forecast, and now we're trying to push this wheat market back a little bit higher. But overall, we caught some good rains for the hard red winter wheat crop in the central and southern plains, and hoping we get some rains in the northern plains. Any thoughts on the wheat markets here on this Tuesday?
Yeah, we're expecting this market. We had a huge rally in April into May, and we're expecting about a 50% pullback, which would get us down another 20 to 40 cents, depending on which one of these markets you're looking at. The big picture, the EU, Russia, the Black Sea market, Canada, and the United States, we're entering into a situation where, let's just say that the plains in Canada miss out on significant rains here. We could be losing between 50 and 80 million bushels of spring wheat alone, just there in the United States, along with Canada and the EU. We could be looking, now I'm not saying this is happening yet, but we're watching it very closely, because we could be looking at the tightest world situation in only 2 times in history, 2012 and 2007. So yeah, we're very much on edge, watching what will happen in the short term. Hopefully North Dakota will get a good 1-inch type soaker, but who knows?
Yeah, hard to say. Let's move over to cattle, and looking at the cattle market today, corn's rally kind of taking some of the gusto out of the feeder market. I know a lot of the news headlines is a lot to do with the packer margins right now. That fight's starting to pick up in cattle, and that's kind of maybe taking the conversation away from this futures market trade and the cash trade a little bit right now. But overall, looking at cattle here today, like I mentioned, feeder cattle down, live cattle doing their best to find some strength, but really we just kind of been range bound here lately after this pullback we've seen, Bill.
Well, I think if you look at the whole industry right now, of course, the packers have enjoyed phenomenal product price, because there's so much demand for our beef, and they know that if they can limit that product supply, they'll be able to maintain those retail prices and benefit from that. At the same time, by shortening up their product supplies, they're backing up cattle. So that's making the cattle get killed pretty hard here. We broke, I don't know what it was, like $5 or something like that in just a matter of days. But that profit margin that they're looking at between $700 and $1,000 is catching some media attention, and I don't think they want that. And so my guess is they're going to start ramping it up just a little bit, and that'll get that product out there to what the consumers want. That'll help clean up our cattle. But here's what's happening. While that dynamic could happen, we've got cattle feeders that we know and we work with who are actually not replacing cattle. So we're thinking there's going to be a shorter supply about October, and we think this market could really get some legs under it. And it'll get their legs under it as soon as the packers start bringing up their price, which we think is going to happen soon. So we're a little bit friendly from after this break has occurred.
And that's a great point you make, and that's something we'll definitely have to watch here moving forward. On the hog market, doing our best to try and test some of those highs once again. We kind of set in and almost maybe put a top in this hog market, it looked like. But then again, we're hanging in there. What's your thoughts on the hog market on this Tuesday?
Honestly, I just don't trade hogs anymore. It's just not a market that I feel is very valid, I guess, for agriculture. So I can't even comment on it. I don't know.
Yeah, well, fair enough. Fair enough. Bill, any other final thoughts you have for us here on this Tuesday?
Well, I think from an economic standpoint, we're still looking at a big inflationary fear. And I think what's happening is that inflation is showing up so much around the world that, you know, how perception often drives reality, even though if it's not reality. I think that inflation fear is going to drive into the United States, into our commodities. And I mean, it has, obviously, but I think it's going to even more. I think the short of that is weaker dollar, continuing to spark the grains. But about 6 to 12 months from now, it's not going to happen right away. We need to really watch what's going to happen, because all of that could come to an end if the Fed starts to raise rates, making the dollar go up, putting inflation more under control. All those three components right there are currently driving commodities up. Those three components could change very quickly with a Fed policy change, and it would hurt us.
Well, Bill, I know you guys have a great team there at agmarket.net. A lot of great insight to help producers with their operation. I know they could reach out on your website, agmarket.net, and you guys have your app as well that folks can download and find a lot of great info there as well, can't they?
That's right. Just go to agmarket.net, give us a call. Either way, we'll get you a couple-week trial, and you can see what we do.
I appreciate the time. As always, Bill Biedermann with agmarket.net. Thanks for joining us on this Tuesday, and we'll talk again soon.
You bet. Thanks, Jesse.
Bill Biedermann with agmarket.net, our guest today here on Market Talk, brought to you by Growmark FS. Find us online, markettalkag.com. This has been the Tuesday, May 18th edition of Market Talk. I'm Jesse Allen.